How's it going, everyone? Today we're going to be looking at Home Depot stock. The stock is currently up 11.7% over the past 12 months. We're going to take a look at their Q1 earnings from 2025 and try to understand what's going on with this company and what's impacting the price of the stock. Over the past 5 years, we're up 58.4%. And over the past 5 days, including this earnings report coming out, we're flat, only up about 1%. So overall, not too bad. So in terms of the earnings report, what we're looking at is $39.9 billion for the first quarter of sales for fiscal year 2025. You saw an increase of 9.4% sales from the first quarter of fiscal year 2024. Comparable sales for the first quarter of fiscal year 2025 decreased 0.3%, and comparable sales in the United States increased 0.2%. The company attributed negative impact from foreign exchange rates that impacted the total company comparable sales by approximately 70 basis points. In net earnings, you saw a slight decrease year over year. For the first quarter of fiscal year 2025, you saw net earnings of $3.4 billion and $3.45 per diluted share, compared with net earnings of $3.6 billion or $3.63 per diluted share in the same year fiscal year 2020, or the same period of fiscal year 2024. The CEO stated our first quarter results were in line with our expectations as we saw continued customer engagement across smaller projects and our spring events, said Ted Decker, the chair, president, and CEO. We feel great about our store readiness and product assortment as spring continues to break across the country, and I would like to thank our associates for their continued hard work and dedication. So you saw a slight decrease in earnings per share. We're going to get deeper into this earnings report and try to understand what impacted that overall. As far as guidance for fiscal year 2025, the company reaffirmed their guidance of the 52-week year compared to fiscal year 2024, a 53-week year. They're looking at total sales growth of approximately 2.8% and comparable sales growth of approximately 1% for the comparable 52-week period. They're looking at 13 new stores being open and a gross margin of approximately 33.4%, an operating margin of approximately 13%, and they're looking at a tax rate of approximately 24.5%. It would be interesting to see if the possible tax bill that's coming up could bring down this tax rate for Home Depot and impact a lot of different businesses, especially as they feel the headwinds of tariffs in particular. They're looking at diluted earnings per share to decline approximately 3% from $14.91 in fiscal year 2024. So they're looking at impact of earnings per share, adjusted diluted earnings per share to decline approximately 2%, and capital expenditures of approximately 2.5% of total sales. So we're going to take a look at what impacted this in particular, right? So overall, you saw in their income statement, this is from their consolidated statement of earnings, there was an increase in selling and general and administrative expenses, operating expenses that could have cut into this bottom line in particular. Another thing I highlighted was that what is good is their overall customer transactions were higher. You saw a 2.1% increase from the first quarter of 2024. So there's more transactions taking place. However, the average ticket did not change much. As you can see, only about a 3 cents difference year over year. So not much change in how much people are spending per transaction. For quarter over quarter, there was pretty much a slight decrease in cash and cash equivalents from February 2nd of 2025. And that was for the first quarter of May 4th, 2025. You saw a slight decrease in cash and cash equivalents. Another thing I highlighted here, you can see on their balance sheet that there was a sharp decrease. They had about $316 million in short-term debt. They decreased that down to $38 million. So it looks like they used some of that cash and cash equivalents from the previous quarter to pay off this short-term debt. So that's a good sign for the company. Overall, the balance sheet still looks pretty healthy. They've paid off some of their short-term debt, and their long-term debt has also decreased. You can see here it's looking like it was at $48 billion for the previous quarter, and it's now down to $47 billion. So it looks like they paid off some of that debt overall. So that's a good sign for this company. It's not looking unhealthy. It just looks like maybe they're hitting some bump in the road, a bump in the road from maybe geopolitical factors as well as tariffs, of course, possibly cutting into their bottom line, which we'll get to in a moment. Operating margin as well decreased from 13.9% in 2024 down to 12.9%. So it looks like a little bit of a shrinking margin is impacting Home Depot. This could be attributed to maybe some higher costs, especially coming from tariffs. That certainly could be cutting into their bottom line. And big keynote is that the Home Depot CFO says the retailer will not plan to raise prices due to tariffs. However, they could see some products and merchandise being either replaced or being taken off the shelves. So, I mean, that's good for Home Depot customers, especially considering how much Home Depot impacts construction. But there's also the consideration that with the amount of construction and investment going on in America, could Home Depot see a nice increase in sales later this year once this tariff business is settled? Could you see a very nice growth in sales for Home Depot due to the amount of construction going on, especially maybe as the housing industry improves? But overall valuation, you're looking at 25 PE. That's pretty normal for Home Depot. And you're also looking at forward PE of about 25.67, or we'll call it 25.5. So pretty normal in terms of PE for Home Depot. I wanted to take a look at what the analysts are projecting as well. The median forecast for this company 1 year from now, you're looking at $420 per share. As of today, we are actually at $377 per share. So that would represent, it says here, 11.2% increase expected in the stock price over the next 12 months. On the low end, you're looking at $331. And I would probably assume that could have to do with tariffs impacting the company's bottom line. However, according to CNN Business, 39 analyst ratings, you're looking at 64% buy, 31% hold, and only 5% sell. So let me know in the comments, do you think Home Depot is a buy at this price? I think that there certainly could be a nice increase in Home Depot stock, especially due to the amount of construction occurring in this country right now with all the foreign investment coming in as well. This is not financial advice. You've got to do your own research and due diligence. However, not bad from Home Depot. Not a bad earnings report considering all that is going on right now impacting the economy. Thank you so much for watching. Please consider subscribing if you got value from this video. I'll continue to put more of these videos out for as many companies as I can. And if you didn't like the video, then don't subscribe. Thank you so much, and y'all have a great day.